What's up, everyone? Daddy's back. Today's my first day back in the saddle, finishing the morning up $1,000 bucks. Not bad. Now, today was not the easiest day for me. Number one, I have never taken a full week off of trading. Since I started trading, I've never taken a full week off. So sitting down, it was kind of like, man, what, everything just felt a little rusty, a little unfamiliar. So getting myself settled in, my first trade, I only took 2,500 shares. I said, let's start small, and if things feel good, I can size up. And I made 2 cents per share. I made 50 bucks. On my second trade, I took 7,500 shares and I made 1 cent per share. I made like $65. So I'm up $111 in the first 5 minutes, and I'm thinking, this is not a good start, because if any one of those trades had turned into a loser, it probably would have been a $500, $600 loser. And it was inevitable that if I had a loss, that's what would happen, and it happened. Had an $900 loss, 950 bucks. So now I'm in the red. And again, I'm like looking at my calendar and I'm like, this is going to be my 8th red day of the month. This is the worst month ever. It's so frustrating. But I ended up getting myself out of the hole. I dug out slowly with a $200 winner, so I was down only $600. Another $200 winner, so I was down only $400. And then a $1,400 winner, and boom, in the green at the daily goal. My work is done. So we'll break down all the trades from today in today's midday market recap. It was a pretty decent day, not the best. I'm hoping momentum really starts to pick up as we get closer to the end of the month and get into the month of March. All right, so let's see. We'll break down the trades from this morning. You guys should be able to see my screen share. So first day back at it after what ended up being a long President's Day vacation for me. Not really much of a vacation, but finishing the morning here, $1,058.24, which is certainly not bad at all considering the market that we've been in. You can see my P&L, green on 3 names, red on 1. I just sort of felt like today the momentum was not easy. So let's break it down. First trade of the day, NXTD. This was right off our watch list. We were watching it pre-market for a gap and go trade, and you can see what happened. It obviously didn't it didn't really go. It was gapping up 55% on news, and the bell rang and it sold off. My very first trade was a small position, 2,500 shares, just trying to kind of test the water and get back at it. So long at 327, out at 329. I thought in this 1 minute candle it was doing like a little bit of a dip and getting ready to squeeze back up over the open price, but it didn't. It hit 34 and then it dropped. So out of that at 29. I then got back in right here for the first 1 minute candle to make a new high at 317, and sold on the pop up to 325, averaging only like 1 cent of profit. I took 7,500 shares and I only made 60 bucks on it. So just wasn't a big winner there. So that was those were my first 2 trades on NXTD. Just a very difficult name. I did trade it a couple other times. You can see I'm at $488 on it. We'll look at those trades in a second. So then switched gears, took a trade on MOSY. This one was off the scanners. It popped up and hit the scans. It was also called out pre-market as a possible follow-through continuation name. So it had a strong day on Friday, watching for continued strength here on Monday morning. So I jumped in this at $2 and 203, 202. But it didn't really hold up very well. So I ended up getting out of half of it at 204 for 1 cent profit. It popped up to a high of 208. I tried to sell more up there at 206, only partial fills. Sold the rest at 202, 203. And then I hit the bid and bailed on the rest at 189. Tried to sell at 195, I didn't get filled. Sold the rest at 189. So only $39.96 of profit on that. So another like just nothing, no trade, no profit on that. And then I took a trade on ZN. As soon as I got into it, I regretted it. I didn't call it out in the chat room. I bought it. I just bought it too high. It was a stupid trade. I got into it right here, basically top ticking it. I got in at 75. There was a seller at 475. It was like a 10,000 share seller. And I was looking at this and I was kind of watching this daily level of 484. And I thought, well, if it breaks over 484, it might go right up to $2 or to $5. And so I jumped in, and then immediately I just realized that that was not a smart move. And so I ended up stopping out at 456. So I lost $968 on that trade. You know, that was my own fault. I just shouldn't have gotten in. I should have waited for a pullback. I was just being a little impulsive. And the problem with my first 3 trades, on the 2 on NXTD and then the 3rd on MOSY, is that they were such small winners that they certainly didn't make up for a regular size loss. A $900 loss is kind of a regular size loss. A regular size win is a $1,000 winner, and I didn't have a $1,000 winner. So I went into the red and I was down like $800 on the day. And at that point, I was starting to feel a little bit worried about what this day would become, because I already have 7 red days for the month of February. It's the worst month that I've had since I've really been keeping track. So first really bad month like this in over 2 years. And, you know, this would have been my 8th red day of the year, or of the month, which was not what I was hoping for. So I said, well, I'm probably going to close the day red, but I'll see if I can minimize the damage a little bit. So next trade was back in NXTD. I got back in at 306, and that was on this candle right here. You can see it's a red candle. I thought that maybe we were going to break out of this little bear flag to the upside. So if I draw this trend line here, you'll see that we had a little bit of resistance at 308. And so as I started seeing lots of buyers coming in at 305, 306, boom, I pressed the buy button. Long 7,500 shares. Sold half at 310, 4 cents. Small winner. Sold more at 310, 311, and then stopped out of the rest at 299. So you can see here, it popped up, it tapped a high of 313, and then it dropped all the way down to 290. So it didn't work. Consolidate sideways, consolidate sideways. I then get back in at 318 as it starts to squeeze up here. Again, 7,500 shares back in at 318 and 319, 320, right around there. 318 and 317. And I ended up selling it at 320. So, you know, I made $206 on that trade. So that got me up to $488, but 4 trades on NXTD, and my winners were 2 cents, 1 cent, 2 cents, and 3 cents per share, which is kind of pathetic. I mean, it was just like not seeing big moves at all. Just very choppy. Volume on this one is like 20 million shares right now. So just a lot of tug of war, a real battle to make any headway. So didn't really do well on that. And then the last trade was GBR, a total surprise. I thought I was done for the day and I would finish the day down $600. I even said to John L10, who's a moderator in the chat room, I was like, yeah, I'm red today. I'm down $600. You know, it is what it is. And then GBR hits the scanner at 10:23, 7 minutes before basically my cutoff. I was like, I'll trade till 10:30 today. I'm not going to overstay my welcome. So 10:23, GBR hits. GBR is a familiar name. For anyone who trades small caps, this is a stock that we know, because look at what it does. You have these days where it spikes from $1.80 to, you know, $2.45. This day, $1.80 to $2.40. We go back a little further. We see $1.40 to $2.22. It's a stock that pops up. Here's a day where it went in 2 days from $1 to $3.80. So it is a former runner, a stock with a history of making these types of moves. So whenever it hits the scanners, I'm usually pretty quick to jump in. Now, the first thing I look at is the daily chart. And when I looked at this daily chart, I could see that we were above one important line. And what line would that be? The 200 exponential moving average. I really wanted to see us above that level, and we were certainly above that level. We had no moving average resistance. So that meant that there was really no resistance until maybe $1.80 and then probably until $2.39. So lots of potential there. In contrast to a stock that hits the scanners and is going to run into the 200, what was the one we had today? Was it MBRX? This one I said, no good. It's going to run into the 200 moving average. And see how it did that just exactly. It tapped its head on that 210 level and then faded. So, that was one that ran into that level. So GBR being above that level is what I wanted to see. So it's hits the scanner at 161. And basically, as soon as I hit the scanner, boom, I type in the symbol and press Shift 1. And I pressed it 4 times. Just jumped right in, filled at 266, 268, 270, added at 167, 170, 182, added at 182 and added again. I sold at 89 and then I added back at 93 and 93. So in fact, high of day was 97. I almost top ticked it with that add, but you never know. This one, I thought if it got over $2, 205 would be my first target, selling maybe some at 205, 210. And if I can hold more of it for a move up to 239, 240, why not? You never know when you suddenly have a stock that is not in play and then boom, it's on the scanners. You've got tens of thousands of traders all using these same scanners. And now they see it, it comes to their attention and they're jumping in. So you can see here, added in the first move, sold half right through here at 89 and then added back for the high day break over 93. So I added at 93, and then, of course, this is what was disappointing, is that it dropped back down from 97 or high of 97, back down to 62. So it just, one of those stocks that it traditionally does not hold its levels. It pops up, but usually in the past, it's popped up more than it did today. So today was a little disappointing that it couldn't get above $2. It hit resistance there, but it was definitely worth a stab. So the setup on this was, it's a former runner, jump in with a 10-cent stop. That's the entry. It's get in with a 10-cent stop because this is a good daily chart, a former runner with a history of breaking out. So on these types of stocks, we just sent 10-cent loss. So my entry at 67, my stop is at 57, right? And obviously, it's riskier to do that. It's kind of like, when as a rock climber, starting by starting halfway up the mountain, right? But we're not starting halfway up the wall with no backstop. We're not starting with no rope. We're starting with 10 feet of slack. So yeah, we're up 150 feet or whatever it is, but we've got 10 feet of slack. So if we immediately slip, we're only going to drop 10 feet, and that's it. You're not going to drop all the way back down. And that's what you have to do with these. You say, well, yes, I'm jumping in while this thing is halfway, to the moon or whatever it is, but I'm setting this backstop of, whatever it is. So in this case, 10 cents was appropriate for this price range. For a more expensive stock in the $4 or $5 price range, I might set a backstop of 20 to 25 cents because they might dip down 10 and then run another 15 or 20 or 40 or 50, who knows. So anyways, that's kind of my approach for trading these types of stocks. They can burn you, and it is risky, and that's why I say, especially to beginner traders in the room, wait for the first pullback. Don't be super, super aggressive about jumping into them, especially on the 1-minute chart. But for traders that are a little more advanced, have been doing this for a while, this right here was a pretty easy opportunity to get in the 67, 70 range, right as it hit the scanners, and sell up here in the 90s. Me being a little more aggressive, I even decided to add up here, kind of, trying to, get maybe a little bit more than just on base, get maybe the second, or third, really try to maybe get a home run, but that sure would have been a nice way to get back at it, but wasn't able to hold up. And now you see a 74,000 share seller at 170, which is a pretty big seller. So, didn't hold up very well. Isn't going to go down as the biggest winner in the history of my trading, but got me on the leaderboard. Green is good, and so I'm happy for that. And Brett, yeah, so to go back, to reiterate the pullback setup, let's look at ACHN. This one was a better example of a pullback setup. So this occurred on the 5-minute time frame. All right, so this is a stock that squeezed up from a low of 305 up to a high of 333. So a fairly big move. And on the 1 minute chart, if you bought on, let's see if it really did any pullback. The only pullback it kind of did was right here around 327. But at that point, it was already fairly extended. It was already up quite a lot. So yeah, you could have maybe scalped it from 327 to 333. Mind you, that's only 6 cents, so probably not a lot. And it came right back down. So then it fades, it pulls back. All right, now the low risk setup that a beginner trader should be looking for would be this bull flag right here. You're buying the first 5 minute candle to make a new high, not even the 1 minute. You're trading off the 5 minute chart. So your entry would have been right there at 323. Your max loss is the low of that candle, which is 319. That's a 4 cent stop. All right, so you got a 4 cent stop, and then there's your profit target, a retest of high of day. So that's a good setup. We like that when they come down and curl off that 9 moving average. This pullback up here didn't really pull back enough in my mind to be a good setup. But yeah, Brett, so that's what you kind of want to look for. And on ZN, we actually got a decent 5 minute setup on it. I was just being kind of too aggressive. So you got a little 5 minute setup. You could have taken the trade here. It didn't work, so you would have stopped out. It then pops, it drops, and then it pops back up. And right here it pulls back. So now you've got a new entry right here for the first candle to make a new high. So you'd be back in at 65. And on this one, you could have sold it up here in the 90s. So, 1,000 shares, that's 300 bucks. And that's the lower risk way of doing it. It's a little slower. It's not as stressful. Stocks like GBR, obviously 1,000 shares probably, yeah, I guess you could have made almost $300. But usually we trade larger size. We try to be more aggressive, get in, get out, quick. But just remember to be mindful of where you're at with your skill set and what risk tolerance you're comfortable with. And again, I really encourage you guys to keep an eye on the swing trades because those are even another step back in terms of reducing your risk. I would say the highest risk would be scalping on the 1 minute chart with 5 and 10,000 shares. Now, it's high risk because it goes the wrong way and you're going to take a big loss, but it's also pretty big reward because when it works, you can have a $30,000 day. A swing trade, you're stepping back. You're on the daily chart. Things are a little bit slower. It's more forgiving. You don't have those big swings. But for a lot of traders, it's an easier way to make that $500 a week with less stress and while you're still working full time. So anyways, just my 2 cents there on that. But that's about it for me today. So finishing the day green, and I'll be back at it tomorrow, just trying to dig myself a little bit out of the hole. I had really hoped that I'd be able to close February at least break even. But I'm still down right now around $10,000 on the month. So, it's going to be a little bit of it's just going to be a red month. I mean, it is what it is. And I'll be back at it tomorrow morning. Just try to keep building back up, and hopefully we have a good month next month in March. All right, so that's it for me. I'll see all of you guys back here first thing tomorrow morning for the pre-market watch list around 9:15. All right, I'll see you guys there. If you're still watching, you must have really enjoyed that video. So why not subscribe and get email alerts anytime I upload new content? Remember, when you subscribe, you become a member of the Warrior Trading family.